Good evening, everyone. Maneko64, home of alternative economics and contrarian views. I'm a little early, so it's 7th of February, 2021. The title of the live stream is Taking Profit in Gold and Silver is like jumping back in the frying pan. A lot of people have asked me before when they need to get out of gold and silver. I am a little early, so that's what I want to talk about today. We'll wait a little bit, about 5 minutes until everyone comes online. I see there's quite a few people here already. I'd like to thank all the new viewers and subscribers. We're getting a lot of interest. I think people are waking up to precious metals, not just silver, but also gold. I think there's the retail sector, the average person is starting to look into gold and silver, and that's the problem the powers that be have. They usually are not used to the physical demand, and I think that's why we're seeing what we're seeing in silver, but also in gold. So let's see here. We've got a lot of people here already. Mike picked, he's the first one there. Elias Jones, Lord Humongous is here. He says taking profit in paper is a joke. Boom D Clap is here. All the usual people are here. It's great that you guys are here. Carlos Garcia says the maestro, humble, good guy. He should be nominated for finance minister. I'm not sure I'd want to get involved in that, but thank you anyway. Music lover forever is here. Mr. Ashford. Rumpelstiltskin, he's in Japan. He says good morning to all. So for him is the 8th of February already. Yeah, 51 likes, and Mario hasn't even started anything yet. Grow Mechanic, hi Grow Mechanic. The Watcher, hi The Watcher. Noah Good, Mr. Ashford. So yeah, I'll stop at it now, or else I'll be saying hello to everyone. Is nothing personal. KGHM does not have 1,000-ounce bar, says Raphael Janus. Yeah, I listened to Ted Butler a few days ago. He was on Palisades Radio, and he said that's where you're going to start seeing maybe the market really short squeeze when the 1,000-ounce bars go. That's for real wholesalers for industrial use. So that's an interesting point there. Yeah, I think precious metals are getting very interesting. We're going to look as well at some charts of gold, silver, and also the CRB index. CRB index is just broken above the 200-week moving average for the first time in many years. So we got Bobby 8270. Hi, Bobby. Lucas Federici, time to sell. Time to sell what, Lucas? You mean gold and silver? No, I think it's far from that. It's time to get on before the train leaves the station, really. I'll just wait a few more minutes and tell you guys what I was thinking when I came up with the title of the live stream. Daryl Wood says, evening, Mario, fellow viewers. EV Zenaz, good eye from Australia. Good eye, Mike. It's the 8th there as well. Cupid Stunt says UK bullion dealers have virtually nothing in the UK or nada. Yeah, I was reading something from Rafi Farber, who's been here, and he said that usually the silver market, for example, is there's enough supply there for industrial use, but there's very little supply for monetary use, and it looks like the public is waking up to gold's monetary use, and that's why we're seeing this shortage. There's it's not like another commodity where suddenly people want silver for monetary protection, and I think that's one of the reasons why the powers that be have been pushing ETFs, because ETFs, not only SLV but GLD, it keeps the public public out of the physical market. They don't want us in the physical. And that's why I've been telling people always to buy physical. Henrik Schoblom, good evening, Henrik. Oh, we've got someone from Slovenia as well. Arsenal Forever from Slovenia. Nice to see you here. Stacking on the low. Typical Brian says, I love gold. Yeah, the other thing I like to say, yes, gold and silver are important for financially for our savings to protect. If you're lucky enough to have grown, been able to save to create a surplus from your working life, it's a good thing. But it's not everything, of course. We can't make gold and silver be everything. There's a lot more things that we should be looking at. I personally think, I would give up half of the gold and silver I have right now for the world to be back to normal, because yes, it's nice that gold and silver have been, how can I say, a good store of value, and I think they'll continue to be. But I really wish things would change back to the way they were. I think that's more important for, it's not everything. That's what I'm trying to say. And I know most of you guys know that. So we'll start now. So yeah, the title of the live stream, what I meant is that, yes, a lot of people ask me, where should I sell my gold? At what price? And I remember listening to and reading from Jim Sinclair, who was Mr. Gold in the 70s and early 80s. He did very well from trading gold, and he still has gold. But one thing he said, when the system reset in 1980, when the Dow gold ratio went down to 1-to-1, he sold his gold. And I think what he meant was futures. And I'm not sure if he sold his physical, but what he did at the time, he switched back to US Treasuries. Why? Well, because interest rates were double digits in Treasuries. So there are times where you switch back to the paper, because when rates went up to 20% in the US and 16% in the 10-year, that was the top. And what that means is that that rates have been going down for like 40 years. But I think it's going to be very different. And I don't know how it's going to happen exactly. But I think the next time, unless, of course, I need to switch some of my gold and silver for an emergency, the next time I'll just think about maybe putting it in a government currency will be if there are new currencies around and they have gold backing, really, because I think the system we're under right now is not going to survive. They're going to keep trying to keep it alive. The system has got a huge amount of debt burden on it. In 1980, it wasn't as bad. The debt of the US government in 1980 was 35% of GDP. Now, I mean, we're going towards probably 200% in the next few years. So, yeah, you have to think of gold and silver physical, especially, as a protection insurance. Yes, you might have to liquidate it or barter it for something else as well. You might need it. I think one of the most important things for people right now, if they can, is to keep their income, to keep doing what they're doing, and be prudent. Don't get into debt. And what else? Yes, I think there will be a time when you switch, and I like saying switch. You switch from gold and silver into relatively undervalued assets versus gold. But I think we're still in the beginning and also in the commodities. So now I'll stop at that for now and look at see if you guys got any questions. I saw that Graham Hobbs is here as well. Hi, Graham. Nice to see you. We've got Lowell Geddes, Cape Breton Island in Canada. Says hi to Billy and Mario. Mario, 48 pounds for Britannia from Bullion by Post. Yeah, that's that's a huge premium. Ben Gray, hi Ben. The other thing that we have to start thinking in terms is that we don't sell gold and silver because gold and silver are money. So we don't say that we're going to sell the paper, the banknotes that we have in our pocket. We need to start thinking of gold and silver as being the center of the monetary system. So we don't sell it. We might buy something with it. Maybe that's the best way to put it, to buy something with it. John A, how do you foresee silver over the next couple of weeks? To be honest, I think we will go higher because I don't think the paper market can continue to hold on below 30. I was reading a research piece by Rafi Faber. I get his reports, the Endgame Investor, and he looked at the Commitment of Traders report that came out. It came out on Tuesday, February 2nd. So we know what happened up until that day. So actually the bullion banks, they short covered on that day that silver went down. They also short covered gold. So we need to see, we'll have to wait, unfortunately, until I think next Friday to see what they did from Wednesday last week until last Friday. But I think they still have huge short positions, and it looks like they need to cover, and it doesn't look like they're selling because they have such a big position, short position in gold, that they're scared of shorting even more silver. So yeah, I think the next couple of weeks is going to be very volatile, but all I can say is that I think we will break 30 in the next couple of weeks in silver. Minus 22 Fahrenheit in North Dakota, crypto farmer. Actually, today here we had quite a bit of snow for London, and it settled on the ground. Not that much, but it snowed most of the day here, which is nice to see a little bit of snow. I don't mind snow. Gerald Salenti is predicting $50. Okay, yeah, I mean, I think that's going to happen, soon. I can't say when. It's always difficult to predict the exact date. Yannick Beaupre from Quebec City in Canada. Cobalt Zekzig, how can we stop them shorting? Well, by buying physical, and that's showing because the bullion banks are starting to cover their shorts. They're buying back. And one thing that Rafi Faber noted in his analysis of the COT report is that the category called others, who are very wealthy investors, family office investors, they are almost as long in gold as they were back in March last year, just before gold moved. So that looks pretty good too. Just have a sip of my drink here. I've got an NDECB mug today. Chuck Silver is in Alberta, Canada. Stephen Birdcage, so is your gold. Should we turn to platinum if the silver runs out? I don't think silver will run out. And I think platinum is going to make a move too. So, yeah. Silver's not going to run out, but it's going to be difficult to get. And but I think silver could, could be very close. If we break that 30 level, it could be quite significant for silver. Uh, Let me bring up a chart of silver. I'm going to make up a chart here. Let's see. Well, first of all, I'm going to bring up a gold chart because I wanted to show you. Let's see. Where is it? Not that one. This one. Yeah. Okay, this is a really good chart here of gold. That's going back to the early 70s. This is a logarithmic chart. So it's on a percentage basis, the moves. And as you can see here, a move to, let's say, 2,600 over here, like that, is not that much of a move percentage-wise, as you can see. And the reason why I drew this long-term chart is to show you here, back in the late 90s, early 2000s, I remember that really well because I started buying gold in 2002, right around here. And Jim Sinclair at the time was talking about this teacup formation. He said he was very bullish. And it broke above that like 415 level, which was the high here in 1996. But as you can see, it took a while for gold to actually break out, and it wasn't up until like early 2006. So it took about, I think, 19 months. I did the calculation, and then it really took off, as you can see here. So now I think we're in the same kind of scenario here. We topped like last summer, so I think we're very close to breaking out here, and I think it's going to be a bit quicker than it was here back in the 90s. So yeah, so I see a lot of potential, and you can see how the market moves after we break this kind of teacup formation and the handle. It's a really explosive move here. So I think it looks pretty good. The timing is always difficult to for us to say when it's going to happen. And you guys probably, a lot of you have seen the FT editorial that I cut off back in 2004. It was in April 2004, and it was around this time that gold was around 400 and trying to break out of this teacup. The FT was denigrating gold. So I'll show you what they wrote back then. Oh, thank you, stacking on the low. So I'll show you what they wrote when gold was trying to break out, and it reminds me what they've been. Hold on. Okay, here we go. So here we go. This is what they wrote, and you see gold was around 400, trying to break out of that, and they came out with negative commentary about gold, that gold was useless, going gold, the pointlessness of holding bullion. So that's why I always tell people, don't listen to the mainstream media. They're not really interested in in the small investors. They're trying to keep us in the paper. They don't want us to buy the physical. That's just for them. Even Lindsey Williams said that the elite always told them that their currency is gold. So there you go. Let's look at, I'm going to draw up a silver chart because silver is looking really interesting. Let me go on to bar chart. Don't forget to like. Yeah, let's have a look here. I've always liked to do charts at work. I used to do a lot of technical analysis for my clients, also fundamental, but I particularly liked technical analysis. So let's do this here. Settings, scale, apply. Yeah, so this is the silver one. Okay. Let's So I'm going to bring the silver one here. Let's share this. All right, so that's the silver one. You guys can see that this is like going back to the early 70s. That's why that 50 level is so important. We had the top in 1980 and the top in 2011. So this is the top of the teacup. It's a huge teacup, and that's why silver is could become really explosive in terms of price to the upside. And that's why you see I think we're breaking out already here. Once we get through 30, we're going to be testing that the top of the teacup, which is around 50 there. So yes, it's going to get really exciting. I think it's the old saying, get your popcorn and sit back and relax. If you should be prepared by now, especially if you've been stacking for the last few years. And I still think you got a bit of time left, but unfortunately, you're going to have to pay up to get anything. Um, and if you don't want to pay up, maybe buy half of what you thought, or exchange half of your fiat for silver or gold that you wanted to do, and maybe wait. And if it doesn't come back down, you have to get in. Lord Humongous, I'm sure the UK has a lot of silver stackers. Yeah, we do. We do. Yeah. I think in Europe as well, the Germans are also big into precious metals. The Germans, because they know they've had a history, uh, you know, three different currencies. They had 1923 currency collapse, hyperinflation. A lot of people forget that in 1945, the currency collapsed as well after World War II. So the German and also so two currency collapses in about less than 100 years. So the Germans also are stackers. Jerome Bosman, what percentage of a portfolio is in precious metals? I don't consider gold and silver to be a portfolio. I consider it to be my bank. So my central bank. It's my liquidity, like it's money. So yeah, I do have some precious metals, miners, especially silver. I think that's a good way. If you have some miners, I think they will do very well. Of course, they're a lot more volatile than the bullion, but I think it could be a way to like take some chips off the table if you have miners. Let's say if the markets do what we think they're going to do, I think the miners are going to do really well. So you take some profit, maybe try to buy some physical with that, or maybe keep some fiat, just a bit. Sometimes it's good to have a little bit of fiat reserves as well, so you don't have to liquidate your precious metals. Um, Black silver staff, out of every 10 people, how many would you say are stackers? Well, in the US, probably about 1 in 10, maybe a little more. I don't know. In the UK, maybe not maybe 1 in 10. I wouldn't even say it's I don't think there's many, at the most 2 out of 10. So I don't think there's many people out there. I mean, some people have done research about investable assets that are in gold and silver, and it's a small, very small percentage. It's less than 1% of the bond market and the stock market. Yes, it's tiny. So if you get a little percentage of investors going into precious metals, it could make a huge difference because the system is so leveraged. They've kept us out of paper for so long. They've, you know, most people don't know what we know. They think that the dollar and the pound and the euro are really safe currencies, but they're not if you look under the surface. Gerolji, thank you for your super chat. He says, I think I'll think silver will be banned to own because the many things silver are used to for. Gold is the metal to own. I have silver, but buy most gold now. I have both. Yeah, I did a video yesterday about silver, and I spoke about the industrial uses, and most of the use. You know, the biggest demand for silver is industrial, and it's going to be silver is really important for all technologies, especially now that they're pushing us to this new green world, or Green New Deal everywhere around the world. Silver is really strategic. Hopefully, they won't ban silver, but we'll see. I mean, what they might do is let the price really spike, and then that's the way they're going to get it, because a lot of the stackers might get out of it, not for fiat, but they might get out to buy land or other assets. That's the best way to look at gold and silver. It's a way for us to be able to acquire things that we think we need. And I can't tell you what you should do with your gold and silver, because I don't know each one of I don't know I don't know your circumstances, right? So I might have a desire to do something, and Chris Conman might have something else in mind, or No might have something else in mind. So thank you, Chris Conman. Mario, concerning your Silver Wars video yesterday, is there a point with silver where it won't be economically feasible to produce electric vehicles? In your expert opinion, what price level might this be? Thanks. Well, to be honest, that was the first time I looked more deeply into the use of silver in automobiles, because it's not just electric vehicles that use silver. It's also the internal combustion engine and the hybrids. But yeah, I would say if we start, right now they're probably paying $25-30 for the ounce of silver. So yeah, I think they start to get worried at $100. So either they're gonna have to swallow the profit margin, or they're gonna have to raise prices, because I think silver is quite an important part of not just building cars, automobiles, but also a lot of other technology, computers, mobile phones, and the rest. But maybe that's something I'll look into, Chris. Yeah, I will look into that, and I'll try to maybe do an update. Yannick Bob, thank you for your super chat. So let's see how many people we got on. Seems to be a lot of people here. 864 concurrent viewers. That's double. Good evening, everyone. Maneko64. Oh, sorry. Yeah, that's double of what up until the last couple of weeks I used to get 400, 500. So there's definitely interest in what I have to say right now, because it's picked up a lot. My subscribers have gone up, also the views. So that's encouraging. It doesn't mean it's guaranteed. Of course, nothing's guaranteed in life, but I think nothing's changed politically or monetarily. We saw this week some important comments from the Bank of England. They're preparing for negative interest rates, for the possibility of implementing them. They're getting ready for it. So they wouldn't tell us that if if it wasn't serious. We saw, because we helped my mother-in-law because she's getting old and she's not well. And we got her statement from the bank, and they've cut the savings rate in half of savings account that she has. Yeah, we saw 1.9 trillion going into this New Deal, that package from Congress. I think the interest rate situation is getting a little bit tricky for the Federal Reserve and the Treasury. We saw the yields creep up last week. In the 10-year, we got up to about 117, 119. In the 30-year, we're almost up to 2%, which is a key level. So I'm going to show you guys the yields here. So the first one I'm going to show you is the 10-year yield, just to show you how at a key level we are. So here we go. So yeah, that's the 10-year yield. You can see here we got to in the big 12th of January, got to 120, came back down to 1, and now we're testing that 120 again. And if you see the high here during the crisis last year, it got up to 130. I've said that that level is really important. Let me show you also the 30-year. Let's get the 30-year up. So here's the 30-year. We're almost at 2%. And if you go back here, yeah, right here, you see, around the crisis last year, a lot of volatility there. We crept up, you know, when it went to 2% there, that's when the Fed started, said they're going to do QE, you know, unlimited amount of QE, because they had to stop the bond market from going down and the prices going down and yields from going up. So we were almost there. And now I'm going to show you as well commodities, the CRB index. That's looking very interesting as well. Let's get a look here. So here's the CRB index. It's a basket of commodities. If you go back, you see in 2002, we started a bull market there up until 2008 when gold topped at 1,000. And it's been basically a bear market since then. Yes, we did go up in 2011 when gold was at 1920, but it didn't match the old high. And so, as you can see, there's a lot of room here. Gold and silver, they've kind of lagged the commodities, as you can see here, since last year. But gold and silver have also, especially gold, has outperformed commodities. But now you see this purple line. This is the 200-week moving average, and you see here in the bull market in the early 2000s to 2008, we need to stay above the 200-week moving average. And basically since then, we've been mostly below that, and we're now back above that. So that's looking very positive. I think the central bankers, what they're going to do, they're going to let prices rise. And I don't say inflation because they've created the inflation. If you watch my videos, I think I see inflation as the creation of money and credit, and prices going up is the consequence of it. But now it's starting. So what are they going to do to keep the yields from going higher, because if the yields go higher, it's going to be a nightmare for the US Treasury, because the US Treasury is having to issue so much debt to pay debt that is maturing, new debt that they're issuing. So if rates go up, the value of the debt, the value of the debt goes down. So they have to issue more to cover the debt. And yeah, so what the Fed's going to do, they're going to find an excuse to increase the QE. So they're going to be buying indirectly from the Treasury in the secondary market to keep those yields low. Where they're going to step in, I don't know, but I think we're getting close to it. Bob Hunter, thank you for your super chat. Bob Hunter says, buy physical silver and drain the Biden swamp. Yes, I've been saying buy physical for years. The other thing I wanted to show you guys, and I'm going to bring up I'm going to share another page here, and it's from the FT. So where is it? This one here. Okay, so this is the story. It came out 5th of February, so Friday. It says, supply chain costs are mounting in all sorts of way. Expect to see more. Well, she says inflation, but I would say expect to see more price rises in the producer section. You see, they've got it backwards. They're saying that when the producer prices go up, when commodities start going up, they're going to say that this is causing inflation. What we need to understand is that this is the consequence of the monetary inflation. We're going to get higher prices. So it says producer prices in months ahead. So here we go. We'd like to draw your attention to two articles that have recently graced FT. FT's German industry correspondent Joe Miller appeared earlier today. German car makers are considering building up semiconductor stockpile to prevent a repeat of crippling chip shortages. You see, so they're changing this just-in-time inventory because the system is clogged up. But I wanted to show you here these charts. This Eurozone manufacturing input prices. You see, here they're not saying inflation is risen. This is right. Input prices are soaring. So inputs are things that we use to make final goods. So that's going to translate into the consumer sector. The input prices. So, and if we look here, people might say, oh, this is because of the lockdowns we had last year, and it's just picking back up. But if you look at before the crisis, back in 2019, we were at a lot lower levels than we are now. So, and I think that's all to do with all the money printing they're doing. Look at this: China, Europe, freight rates soar. So, I mean, this is just a real eye opener, because you would have expected the freight rates to go back up to the levels that we had here prior to the lockdown, right? But look where it is now. I mean, this is crazy. Yeah, they're going to blame the supply chain. That's got something to do with it as well. But if they hadn't printed all the money that they have, this wouldn't be around. So I think this is pointing to red flags. And the other thing that is really important to realize is that the central bankers, they're not going to raise rates because of the price rises. So yeah, they've told us that. The Fed said they're going to keep rates unchanged near zero for at least another 3 years. The Bank of England said the same thing last week, and the ECB won't do any different. So now let's look at some of your questions. Let's see how many of you are here. Yeah, almost 900. The stream's Just wanted to ask you guys if it's buffering or if it's okay, because I got like some kind of warning here, but I think it's okay. Christians in Altoona, thank you for your super chat. It says, great show. How will silver and gold perform in the steep market decline? USA, Pennsylvania. Yes, in the past, last year, uh, gold dropped below, I think 1500 to 1450. Silver got hit really hard, but got down to like 11 or 12. But I think this time, um, yes, the central banks are not going to wait that long. So you might see a short move lower, but it's not going to be for long. And I've heard from many people uh, that back in March, and you, if you thought you could call your bullion dealer, your local coin shop, and say, "Oh, I want to buy silver at $12," that he would laugh at you because he'd say there is no silver to be bought. So that's what you have to think. The thing is to just sit through. But I have a feeling with commodities breaking out as we saw there, the CRB index. I have a feeling things are changing, and we might see gold and silver and the miners detached from the overall market. Let's see. Oh, someone's mentioning Bitcoin here, so that's actually reminded me of something. Uh, uh, Penny pinching prepper, are you a Mason? No, no, I've never really been into those kinds of institutions. I was invited years ago by a friend. Yeah, he like his wife was a friend of. No, he was a friend of my brother-in-law, and my wife and I we became friends with him and his wife, and he was a Mason, and he invited me for like a dinner, and it wasn't really something for me, so I'm not. So as for Bitcoin, and what the Bitcoin question reminded me, or someone saying Bitcoin is king, a lot of people are saying that the central banks are going to come back with a digital currency. They might, unless they have. I think the most important thing to look at for central banks is their balance sheet. Their balance sheets are going to keep inflating. Their balance sheets are going to be loaded with mortgage-backed securities. They're starting to buy corporate bonds. They might buy stocks. Their balance sheet is going to become really toxic. It's going to have very little gold. So if they want to bring out a digital currency, unless their balance sheet has more gold, or they allow the gold price to go up so their balance sheet has more gold value, I'm not buying the digital currency because it's just going to be like the current fiat currency. So I think when people talk about central bank digital currencies, I think that's something that's superficial because we have to keep an eye on the balance sheet. I was reading today, and I'm going to put the link here for you guys. You should read this guy. He's really good. I did an interview with him. Um, I think it was end of 2019, before the crisis. And he explains really well what you need to know about gold, the Fed's balance sheet. Here we go. It's Dan Oliver from Mimicum Capital. It's free. You can read it. So yeah, I think unless they can bring a digital currency, but they'll have to give it a lot of gold backing. The way to do that is to let the price of gold rise, and I think they're going to have to do that. So that's how I feel about that. I recommend you guys read that article there. Michael Varhaft, is Rafi Faber available? We are both in Israel. Yeah, Rafi Faber was on last week with me on a live stream. No, he's not coming on this. This is my Sunday live stream. I'm usually on my own, but maybe next Sunday he might be interested. The thing is, 9 o'clock here. I always start the live stream at 9 p.m. London. Is 11 o'clock in Israel. I'm not sure if that would be too late for him. I will ask him though, maybe next week. Music Clover thinks there will be 2 resets. I think the market reset has been happening since, well, for about 20 years, since the dot-com bubble topped or burst in 1999, 2000, because the gold, the Dow gold ratio was above 40, and now we're below 20. And I think eventually when we get down to 1-to-1, it might even go through 1-to-1 this time, because they've inflated the system so much that it might go through that level. Dan Oliver talks about how in 1980, the gold holdings of the Fed, they got gold certificates, and the gold's held by the US Treasury, but their holdings at the price that it almost reached 900, their holdings was worth 135% of their liabilities or their balance sheet, which is silly. It was 135% backed. But that's what happens when the system, when there is a market reset, it can go through that 100%. And when he wrote this paper that I put the link, I think the Fed's balance sheet was still around 3.5 trillion into 2019. I think it was just when the repo crisis started. And he said, if we go back to, because he also talked about how, like the Bank of England balance sheet during the 19th century under a gold standard was around 33% gold. And he said that at 3.5 trillion from 2019 Fed's balance sheet, that would be around $8,000 gold. But now the Fed's balance sheet is like doubled. So that's like $16,000 gold. It might be a little less. I'm not sure, because he also said that the Fed gold backing through history had been, prior to leaving the gold standard, had been about 54. So yeah, I think, wait, the 33% was 5,000 gold. But okay, let's get rid of some Bitcoin trolls here. Okay, so yeah, if we do as the British did under the gold standard, 33%, I think now we'd have to be like $10,000 gold. But the Fed has had 54% on average gold backing under a gold standard, which was around 8,500 back in 2019. So the balance sheet is doubled now, so that would be 17,000. And I don't think the balance sheet is going to stop growing. Desiree Negron, thank you for your super chat. Desiree says, thank you. Any minor favorites? Jerome, I've told people the best, there's a lot of miners out there, and I think all of them could do really well in a huge bull market. So you could pick almost any miner, but I think the best thing to do that I've done in the past is to go through prospectus from like Sprott asset management, or from the ETFs. You go through the prospectus and you see what gold miners they hold. First Majestic, I think, yeah, I've got First Majestic. I've got Pan American Silver and Hecla Mining. So I'm not telling people to buy that, but I've only got silver miners because I think silver is going to do a lot better than gold. So I've stuck to the silver miners. But you need to be careful with the mining stocks, because they're very, very volatile. Patrick Gelpke, do you see a fiat collapse this year, or will it take longer? Force majeure in the COMEX. I'm not sure, we're going to see a force majeure in COMEX. We might just see what happened last year, the big spreads, fiat collapse. Yeah, I think the fiat collapse will be reflected in the price of precious metals. So yeah, if we've got gold at 12,000 and silver, at 800, I mean, that means the fiat currencies are worth a lot less, and I would expect commodities. I don't think they will. Yeah, that's how it's going to be reflected, in my opinion. Super Seamster suing show. How do mining shares work? Well, they're just like buying a stock, buying a share of a company, except that it's a company that mines for gold or silver. That's how they work. The thing is that when they mine gold or silver out of the ground, their costs uh, are usually less than the price of gold and silver. So let's say a miner digs gold out of the ground and it costs them $800 an ounce to dig that gold out of the ground. If the price of gold goes up by $400, they've their their profit margin is doubled. So wait, yeah, if it costs 800, so they're making 50% on their cost of mining. So that's how it works. It's a leverage play on gold, but because they're they get gold and silver out of the ground for a lot less than the spot price. But there are other risks, like political risk, where the mines are. There's also risk, management, who's running the companies. There's also risk uh, of currency risk. If a mine, for example, is in a country, let's say in South America, and their currency collapses, their costs are going to go up a lot, in hard currency, so to speak. So yeah, those are mining companies. It's just like buying, any other company. So you're not really owning gold or silver. You're exposed to the producers, to the miners. Impossible Machine. I wish I could ring your doorbell and watch Billy jump into action. Yeah, he's pretty. These dogs are supposed to be like sentinel dogs, the Shih Tzus. So they do wake, they do jump. If someone rang the doorbell right now, he would be off like a shot. Uh, do you get your monies in silver? Is that for the mining company? No, I'm not sure if there might be companies that might want to pay the dividends in silver coins. That's possible, but I think some of the mining companies, the gold miners, are starting to pay dividends, and some of the silver miners are going to start paying as well. Looter 92 is the Mafia real? I think so. Anything else I wanted to show you here? Have you been on Max Kaiser's before, Monaco? No, I've never been on. I've never been asked to go on Max Kaiser's show. I did meet Max Kaiser and Stacy in 2009. I was still working in the city, and one of my colleagues that I worked with, we were both into gold, and he got some tickets for the FT Gold Conference, and we went, and Max Kaiser was there. I haven't watched him much these last few years, Max Kaiser. Tribulation Prepper, enjoyed your and appreciate your commentary yesterday at Truth, Money, and Freedom. Yeah, Truth, Money, and Freedom. If any of you don't know, it's a Discord group about precious metals, especially silver. I recommend them. I think they've got 4,000 members. Over here, are you going to purchase any precious metals this week prior to G8 meeting? Um, I'm waiting because I bought a few silver coins from someone on Instagram, a bullion dealer in Texas. He hasn't come back yet with the cost of shipping. Super Seamster Suing Show. Thank you for the super chat. Says, thank you so much. Can you get paid in silver? Me. Um, yeah, I mean, I don't have a post office box, a PO box. So I guess, yeah, I wouldn't want to give my home address. So yeah, I mean, yeah. So I can't get paid in silver, unfortunately. Not that I don't trust you, but you know how it is. On the internet, you shouldn't really give out your address to anyone. Freedom. What's the group called? Truth, Money, and Freedom. That's the name of the group on Discord. Truth, Money, and Freedom. Royalty companies are good as well. Yeah, they are good royalty companies. Yeah, Super Seamster. Yes, I have heard in the past that some mining companies have paid their shareholders with the physical silver, maybe gold, but I don't know of any company that does that now. But I guess if you get a fiat currency dividend from them, you could take that and buy gold and silver. Sam W. Bix, we're going on about the precious metals in the Grand Canyon. Yeah, I'm not really. I read about, I think it was in 1912, and there's an old article. I forgot which newspaper, but yes, they did some surveying in the Grand Canyon, and they found that it could have some gold, but it wasn't economical to mine for it. But I think Bix Weir seems to think that there is like billions of ounces there. But from reading the article, what I saw is that they said that it could be worth like $2 billion at the time, but not ounces. So I don't know. Adam G, have you been on Wall Street Silver on Reddit? They link to your YouTube at the top. Oh, that's good. I, I think I went on last week. I had a look. Truth, Money, and Freedom podcast. They're here. Thanks for the mention, Maneko. We love it when you can visit us. Yeah, that was fun yesterday. We were on for a couple of hours, I think. It was quite interesting. The money fork, possible the Fed insiders are loading up on treasuries in events of a currency reset. Treasury claims would stand for US dollars, silver, gold back in the event Fed notes default. Could be. I don't know. I think they could be loading up on the real thing as well, I'd say. Buy Doge. Billy doesn't like Doge. He likes the Billy coin. How do you think infrastructure will fare in the event of a monetary reset? I haven't really thought about that question. From what I know, in the US at least, you need a lot of infrastructure work. So if there is a monetary reset, I think it could be good for economies, actually. So it would be good for infrastructure because maybe not immediately, but it would. I think it would. The economies would pick up more than they would if we stay under this system now where there's so much debt. It would free up the private sector. It would, and this would take a few years though, and it would allow the economy, the private sector to be more productive for people to create more wealth. And then, you know, we, that could be a good thing. And maybe it would divert a lot of the taxes and wealth from like unproductive and from the bureaucracy. So yeah, I think it could actually be good because the last 50 years of fiat currency has really hurt infrastructure. uh, and I think if we have a reset, people are going to have to, the government and taxpayers, they're going to want that money to be spent in a good way, not fighting wars all over the world, not bailing out Wall Street, every 5 or 6 years. So yeah, I think it could be good for infrastructure. Canada, yeah, Canada has gold. The country, there's a lot of gold. A lot of the mining companies are in Canada. I think what you mean is the Canadian Central Bank or the Canadian Treasury. They don't own any gold. I mean, maybe they don't think it's necessary, but I think it's a bad policy. We here on this chat own more gold than Canada. Jeremy W., if we go back to historical average of 16-1 gold to silver ratio, is 10,000, then silver will be doing very nicely. That's right. I mean, I was actually looking at, I have a little gold dollar. It's like 1.65 grams from 1853. And I took a silver dollar and I weighed them and I did the calculation, and yes, it's about 15.75. So it's and that ratio lasted pretty much around 15, 16 because it started out in 1792. The Coinage Act, it was at 15, but then they raised it to around 16. So from 1792 to 1933, it stayed at that level. So I think eventually we'll go back to that level. But if it is a market reset, we could see that go through 16 or 15 because silver's been suppressed a lot more than gold for so much longer that we could see that blow through that level. Actually, and silver could go like to 10-1, but I think eventually it would revert back to that level. Thank you, Bob Hunter, again there for your super chat. Brian Ward, uh, just to tell people, uh, yeah, there's quite a few people here, and I'm trying to answer as many questions as possible. If I don't answer your particular question, is nothing personal. Brian Ward, did you know our central bank here in New Zealand has no gold? I wouldn't be surprised. So, but I didn't know. I think Australia has about 80 tons. Uh, And yeah, 80 tons, which isn't that much. And most of it is at the Bank of England. Guroji owns more gold than the Norwegian central bank. I think during the European sovereign debt crisis, when the Irish banks basically all collapsed, the institution that had had the most cash in Ireland was Paddy Power, which is a betting company. So there you go. This dissident agnostic. Do you think artificial intelligence will lock the human species away in a vault for wealth storage purposes? I think that's probably what Mr. Herr Professor Dr. Schwab, I think that's what he wants. I don't think you'll get that, though. I don't think evil will, you know, evil will succeed. It never does, even though it's all we always have to, try to expose it and fight it. Grow Mechanic says, Alistair McLeod says London has no gold. Well, I have some gold. Well, yeah, what that means, I think, in the case of the LBMA and all the Bank of England, the bullion banks, is that they've lent out their physical gold so many times over that yes, they're in a bind, and they can't. The people who they've lent the gold to, uh, they need to buy it back. So yeah, there's always gold. There's always enough gold. It just depends on the rate that you pay for the gold. If it goes to 10,000 tomorrow, there'll be a lot of gold. It will come back online. Well, I'll stay on a little longer here. Um, we've been on for an hour, but why not just another few minutes? Yeah, Klaus Schwab, when he started the World Economic Forum in the early 70s, it was called the European Management Forum. And one of the guys that helped him set it up, he was like a, a chairman of the conference, the Davos conference. And his name was Herman Abs, and he was the biggest banker. He was director of Deutsche Bank during World War II, and and he got away, during World War II. So that's the kind of people that started out that World Economic Forum. Morocco Mo says there's 801 to 1 claims per ounce of silver. I wouldn't be surprised. You know, and they can keep that as long as they need to only provide physical silver to industry. But the problem they're having now is that the retail, not only in the US, but it seems to be spreading all around the world. They want the physical. They don't want, because I think the important thing about this Wall Street bets is that they can't, someone came out, I don't know who it was, and said buy SLV. And then everyone countered and said, no, we have to buy the physical. And I think many people didn't know that. And that's what's happening. We're actually seeing people go to the local coin shops or the bullion dealers, and they want the real thing. And this is really surprising, I think, the big boys, the bullion banks. Joseph Charles Collin, thank you for your super chat. He says, you missed my super chat. I think I'm not real. Yes, I make painting called Canvas Gold Bars priced by time. Sorry, Joseph, maybe I did. Sorry if I did. But there you go, guys. Joseph Charles Collins, time priced art. Look him up. Canvas gold bars. Yeah. Buy physical, don't take the yeah, the V. I've gotten a text from the local GP about going for that C thing or the V thing, I'm sorry, and I just ignored it. I don't want to be a guinea pig. $40 silver end of decade. Is that per gram? Yeah, I don't know. I think we're going to be at $40 way before the end of the decade. All right. Okay, I'm going to call it a night here because we've gone over an hour. I try to keep it to an hour. Thank you, everyone, for showing up. Thank you for all your support, and I'll talk to you tomorrow. Take care. Let me. Okay.